Okay, hello there again. Now we're here to talk about trading the indices because from my presentation on RORO risk on risk off, we now do know that there is a correlation between the indices and also the forex pairs, especially the ones that move together with the indices, such as the AUD JPY pair, Aussie yen, or even the Kiwi yen and USD JPY, USD yen. Which tends to move in tandem with the stock markets. So I think in trading forex that trading the indices sometimes is much easier than trading forex because there is a certain pattern of movement that is easy to study and master and predict. And this is why I like trading the indices. It also gives you more returns and allows you to make money more consistently. And in fact, trading the indices is the way to go when you see my products, which are actually based on the DAX index and also the S&P 500 index. So again, trading the indices is really a classic risk on and risk off trade. You see this, we always say that the good thing about the forex market is it starts in the morning and goes throughout 24 hours. Well, guess what? The indices also almost work the same way, but it's stock indices across 3 different continents. We start the day with, the ASX in Australia, then you have the Nikkei in Japan opening, then you have the Hang Seng in Hong Kong. This is in Asia because I am living in Asia, so the markets start way in the morning, and then in the afternoon, which is morning Europe time, we have the DAX in Frankfurt opening together with the Euro stocks. Later, it's of course the FTSE in London, and then later towards the night, again in Asia, and towards the morning in the USA, and towards the afternoon in Europe, we have the Dow Jones, Nasdaq, and S&P 500 opening in the US. So as the forex markets trade, you got to understand that the indices are also trading, and the interaction of the indices, whatever happens to the stock index, are factors that could move the forex market. And this is the real core or understanding of trading forex. If you want to be a good trader, you have to understand intermarket analysis and know what's happening to the equities market. So why do you want to trade the index? Well, basically the first reason, hey, it's correlation. Standards and Poor's 500, as the indices move up, and this is also applicable for DAX too to a certain extent, as the indices in the S&P 500 goes up, you see the US yen pair go up, you see the Aussie yen go up, you see oil goes up again. And when we are in a period of risk aversion, when the indices go down, you see people flocking to the yen. People are now selling the USD yen pair. They're buying gold. They're buying pairs like Euro AUD and also Euro USD. Again, Euro USD is fairly new into this risk on risk off game, because since it became a very low yielding pair, people flock to this low yielding pair whenever there is a turmoil in the market. So take of trading index, take it as something that if you don't want to trade the index, you know what, you're actually already trading it, because if you're playing these pairs, you are actually trading the index proxy. So doesn't it make sense that you should know something about the index? Sure it does. So one of the reasons that I like trading the index is, unlike forex, the index has repeatable patterns which can be acted upon. It happens time and time again, and as I said, this is the basis for my 2 products. Secondly, the proxy for forex indices returns 3 times as much in returns versus trading forex. For example, I can get 3 times as much money if I make a trade right on the S&P 500 versus making the same trade on the USD yen pair. Now, as you know, because the indices are not 24-hour market, they close, so unless you exit the position, you could be at risk for a serious gap during the next session. So this really forces us to close the trade, and I would advise you want to trade an index, just trade with smaller lots because you're going to make 3 times more money than you do forex. So I have here a great article by Saxo Bank. You can actually go and Google that, and it shows you the pattern that repeats itself, especially in the S&P 500. And I find that if you look at the index, you see that some periods of the index open, when the indices open, the European and US opening in the stock markets are periods of high volatility, which also impact Forex. So again, being a good index trader would make you a very good Forex trader. You don't lose anything. So this is my first product on the index. It's based on the German DAX index. Just go and sign up here and get a special offer. And if you want more questions, just drop me a mail. Okay, bye.